Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, December 5th, 2024. So, we actually saw a little bit of a pullback today. I kind of thought they were going to make a run for the 6100 just because it's a round number, but they made it up to the 6096. Then we had a little bit of a pullback, but you can barely even see it here. If it's going to be a full pullback, yeah, I would expect that the 6037 is going to come into play. You can see that's also the 50-day moving average on the 60-minute chart. So this would make sense. This may be a good buying opportunity. But as I've been putting in the report and I've been saying, there's a lot of say indicators that I follow that are giving major warning signs. Now they may not play out until 2025, but the put call ratio, it's at levels that makes this rally really not that sustainable. And I also showed today that we have a NIAID sell signal. So if we saw some backing and filling and we saw a pullback, it would make perfect sense. But the seasonality and just the extreme bullishness that's out there, you got to let it wear down. I'm seeing people coming out now and, saying more and more that you just have to be in the market. And whenever they start saying that, that's when you want to get out of the market. So I'm not suggesting to short just because it's just too dangerous. Momentum's going too hard. But it's one of the things that you just have to be very careful and expect the unexpected. That's probably the best way to put it. So if we have a pullback, with the NIAID sell signals, honestly, that, and as well as the sell signals on the 60-minute chart, as well as the sell signals on the daily chart, it wouldn't surprise me to see it move all the way down to the 59.41. But as I said, the seasonality is on the bull side, so we may not see this until sometime in 2025. On the 15-minute chart, you can see we had the bearish divergences in place here, and it never made it up to it came pretty close to where I was saying the projections should be, and that's kind of why I thought it was going to be there. So we got up, we got a little bit of a pullback. Again, support is going to be right at this 60.63 if we see more of a pullback. If it drops more than that, then we're looking at the 60.33, and that kind of matches up with the 23% retracement. So it looks kind of organized. I wouldn't really make too much out of today's drop. If we saw a little bit of follow through on the downside, that would make perfect sense. But I'm just doing it day by day. Comes the end of the day, I'm cash, and I don't have to really worry about anything. So today we could have made a lot more. We made 1,600. And I actually figured out what this is now, because I kept saying when I was showing the S&P futures, the S&P results, that it was showing like 75,000, and I couldn't figure out why, because that whatever this number was should have been the same as this. So it should have been up 58,942, but it was showing. And then when I pulled this up, I saw 16,530, and then it hit me. This was a Russell 2000 trade, so this has given me the profit loss year to date on the Russell 2000. The other one was on the S&P 500 or the SPX. So that's what that is. So we did another 1,600. We could have made more. I was picking on the Russell because that was that was definitely the weakest index out there. So when I took it, hang on one second, I'm going to show you. Okay, so this is the Russell 2000. Now, what I was originally looking at was just this, really this channel that was in place here. So we had one, and then we had here. So when we started coming down and we got this little bounce, I sold some call premiums. It was all the way up at the 24, 25, 24.30, and it just went straight down. So when we got right around here, I took that trade off the table because there was some pretty good odds that we were going to bounce back up. So that's where I made the 1,600. We could have made an additional 800 on that. It would have been 2400 if I just held it. But in any case, once we broke this support, now again it was open for shorting at this resistance line that was support, that's now resistance. And I went to go. I actually had typed it out that I was going to I was going to sell some call premium again, and I got onto a phone call. I totally forgot, and obviously you can see what happened. So today very easily could have been another $3,000, $4,000 day, but it happens. So anyway, let's get back to the S&P 500. And again, so you can see the bears are trying to get it through the 50-day moving average. If they do, the next support is going to be the 60.63. Then we have support at the 60.53. And if they take that out, then we're coming down and testing the 60.33. This would probably be the healthiest for the market. Now, really, the bears are going to have to get, they're going to have to take out this level to get any real momentum going on the downside. So they have the work cut out for them. We have bearish divergences. We're now on a sell signal, but again, this looks very organized, so I wouldn't really read too much into it. And again, if this was all they needed on the downside, and they come up, if the bulls can take out this 60.95, the next target 61.02, 61.07. So that's really about it. It was really kind of a nothing day for the S&P. The Russell 2000, it was open season for shorting because any bounce that was that they gave us was just being sold off. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in the morning.